Okay, hello, everybody. This is a Finance Committee, February 18th, 2026 at 6:30. Actually, it's 6:32, and this is a Zoom meeting. So, calling to order. We have tonight myself, Jean Maixner, Laurie Robinson, Ray Meador, and Marty Jeide. Rob Gibbs and John Gingrich are excused. So this order of business is to adopt the agenda. Hopefully everybody had a chance to.
We need to amend it before it's adopted and add the 2 additional capital requests.
Yeah, sorry. I'd like to suggest that we adopt the agenda with the amendments to it and the capital requests that are associated with that.
Second it.
All right. All in favor?
Aye.
Aye. Unanimous?
Yep.
Okay, great. Thank you. Announcements. Does anybody have any announcements they'd like to make? Nope. We had snow today.
A little.
A little, just a little.
We had a good turnout at the senior tea yesterday. Over 50 registered, and I think pretty close to 50 came.
Yeah, people seemed to enjoy it, didn't they?
Yeah.
Yeah,
There was no agenda and it was free.
Can't miss.
And there was food.
There was
good
food.
Yeah.
Yeah.
It was good.
It was good. All right. Thank you, Ray. Do we have any property owners that would like to make comments? Joanne?
There are no property owners logged into the meeting.
Okay. All right. Very good.
I have a question on that.
Yeah.
I don't know how to do the flag when I got a question.
Oh, there should be a hand to raise.
Oh, a hand. Okay, I found it.
If you raise your hand, I'll try to take a look at you, but there's a hand on the bar.
Okay, I found that guy right there. Okay, got it.
Yeah, that guy.
Okay.
Yeah.
Well, I did have a question. So this meeting is open to everybody can listen and they could make comments also. I'm looking on the agenda here that it's available. Is that
Yes.
okay?
Yeah, that's correct. It doesn't happen very often. I don't know that I've ever been on a finance committee meeting where we've had anybody make comments, but I suppose once in a while it could. Okay.
Okay, I'm good.
So if no property owners are here, the next is to move. What's that?
Joel is trying to get on his Zoom. He's restarting his machine. Is there something wrong with his machine?
Oh, okay.
So
Okay.
he'll be here in a minute, basically.
Maybe it's user error.
Yeah.
Yeah, I wouldn't have suggested that to him.
Okay.
So I know we have the minutes on the agenda for approval. Does someone have those on their computer that they could share so everyone could just see them? I don't know if you distributed them, Jean, to everyone.
I did.
Oh, awesome. Then we don't have to show them.
I think I just did. It might have been earlier today or yesterday, but I did send them out.
And my apologies. I thought I had sent them like 2 weeks ago, and I had not.
I just appreciate you taking the notes. So now I know.
And I couldn't find them because they were labeled like 2024.
It would be nice to go back some years, but
Yeah, I just forgot to change the file.
okay. So has everybody had a chance to look at the minutes? Are there any questions or amendments or changes to the minutes? Everyone's okay with them? Okay, move to approve the minutes.
So moved.
All right, all in favor? Aye.
Aye.
Okay. All right, we're rushing through this, getting to financials. Is Joel been able to sign in?
Not yet.
Can we do a capital request without amending the agenda? Can we
Well,
I
switch
mean, can
them?
we skip? Yeah, we can
Yeah,
skip.
good.
That's fine.
Okay.
Yeah, okay, all right. Well, why don't we go ahead and go? Everybody see actually forget the meetings, dates were set out. Hopefully that works for everybody. When the meetings are occurring.
Very well done. Very well done.
That's
Thank you.
Joanne.
Very well
Hey,
done.
Joanne.
Yeah.
Okay, so the first capital request is for paying for the biannual bridge inspection, the 2026 bridge inspection. The request is for the board to authorize to spend $6,976 from the 2026 capital budget roads for the required biannual bridge inspection. Joanne, do you have anything you'd like to say about, kind of getting everybody up to date about the inspection?
Well, these inspections occur every 2 years, and they include bridges on the golf course as well as bridges throughout the association on different roadways. We do have an approved and accredited inspector do these inspections. And like we said, it happens every 2 years just to ensure that they're safe. This year, we had to pull up the inspections because there was damage done to one of the golf course bridges. And I authorized our capital project manager, Tyler Andrews, to bring an engineer on site to evaluate the damaged bridge and create instructions for repair. And that was already approved by the board at the meeting last week. But Tyler was able to get the inspector to come out and do all the inspections at once, which saved us another mobilization fee. So we went ahead and paid for the inspections out of our on-call funds, but we now want to approve the spend of the capital funds that were budgeted so that we have the on-call funds in reserve in case as other things happen. So the Integrity Structural Engineering has done these inspections every 2 years since 2022. The inspection fee was $55.61, and in last year and this year it's $6,976. The reason it's more is because they created those maintenance and repair drawings for the 2 bridges on the golf course that were damaged. And that's why we're asking for the $69.76. So anyway, I'll stop talking and ask if there are any questions.
Laurie?
So Joanne, these inspections already occurred, correct? Oops, I think Joanne's frozen.
Well,
If I'm not mistaken, these already occurred. They were paid for out of the on-call funds, and what we're doing now is approving them to come from the capital budget and not from the on-call funds.
That's correct.
Okay.
Hopefully you can still hear me. Yes, that's correct.
Yeah, now I hear you. You're frozen for a little bit. Okay.
Any other questions?
No, hearing none. Okay. So Joanne, I'm going to make the motion, but in the past, few times that I've been on this committee, they have suggested that this wording gets changed on these from I move that the board authorize to the finance committee recommends that the board authorizes. That's
correct. I write the memo as if it were going to the board and you get to review it in advance of that. So you have to change the wording.
Okay. All right. All right. Then for the motion, I move that the finance committee recommend that the board authorize to spend $6,976 from the 2026 capital budget roads fund for the required biannual bridge inspection. A second?
A second?
All right, all in favor? Aye.
Aye.
Looks unanimous.
Gotta happen.
Hmm?
It's
You gotta, yeah, it's
gotta
gotta,
happen, so.
does have to happen. Joel's still chiming in, trying to check in.
Joel's here, but he's muted. Joel, are you ready to present the financials?
Yes, I can do that.
Great.
Now, the
So-
financials are not in our packet, correct?
No, they're in the board, they're on the website.
They're on the boards thing. Okay.
Yeah, and Marty, we showed in January's meeting, we showed where everything was located. Do you have any trouble finding them?
No.
Awesome, thanks.
Yeah, I'd be happy to send them to you after the board meeting too, so.
I'm in the finance committee packet right now, but I can see the screen.
Okay,
Okay, so I'm going to be going over the November 2025 financial statements. Now, I did this last week at the board meeting last Thursday, and at your previous the preceding finance committee meeting, Joanne, from what I understand, has gone through and done a pretty good primer of the financial statements and kind of done like a little walkthrough. So what I'll do is since I've already done this in total at the board meeting, I'll go through this in a more expedited manner. I'll just hit the important points, and then that'll be after that. Then any other question that you have, I can answer that when I'm through these financial statements. So what you're looking at, everyone can see these financial statements on your screen, I take it?
Yes.
yeah,
Okay.
Is there a trick to making them bigger? For me? This must be.
I can only make them smaller.
Oh, that's good.
No,
Right
no,
there.
I'm just
Perfect.
kidding. Yeah, I
That's
made them
perfect.
bigger.
Thank you.
Yeah. That'll cost a cigar. Right.
There you go.
So what you're looking at, so I always start out with the balance sheet, and the only number that the only really number of importance at this point we're bringing up on the balance sheet, which is kind of different, from other months and years past, is what we're looking at right now is what I highlighted is the operating cash on here. So you can see at the end of December 31, 2024, this first column, you can see operating cash is about 579,000. At the end of November of 2025, it's 346,000 rounded. Basically, so you can see the cash has decreased. This shows you the increase decrease over here on the right column by approximately 233,000. Now, the one thing that is drawing down cash, and obviously this cash drawdown really took effect during at the end of 2024 and into 2025 is the big thing is hazardous trees. That's what it's coming down to. It's coming down to an excess expenditures of hazardous trees. And so just keep that in mind when I go deeper into the financial statements. So that now we'll just go on to the second page here. Okay. So what we're looking at here is we're looking at the income statement. This is basically, you think about it like the consolidated statement for the entire association. All the departments are rolled into this. We'll focus on this right here. We're looking at this section of the statement, 11 months ending since we're in November. And you can see that the net income, basically the bottom line net income for Sun Valley, this is the operating net income, 168,411 at the end of November of 2024 is around 363,000. So obviously there is a decrease there. You can see that in terms of the budget, we're about 18,000 worse than budget, which actually isn't too bad. At the end of November of 2024, we were approximately $287,000 ahead of budget. Now this budgeted line item, or this budgeted number, I'll point out from year to year, we fine-tune this number. So we do a look back on the year before and when did we spend things, and in terms of what months did things get spent, whether it's raw materials for golf or AGM expenditures or that sort of thing. So from year to year, this better or worse than budget can become more fine-tuned, and it always becomes more fine-tuned from year to year. So you'll see some differences from one year to the next because of that. But last year, obviously, we were better than budget by 287,000 at the end of November 2024. A lot of that was related to building fees, the increase in building fees, which was a really good kind of infusion of cash into the association at that point, which really, quite frankly, that's what really bailed us out of those hazardous tree expenses at the end of November of 2024. You can see that our collection rate is 97.6%. We budget for a 95% collection rate, so anything over 95% is good. That's obviously what we want to see. We ended out the year at the end of December 2025, we ended out the year at 97.97% collection rate, so basically 98%. At the end of December 2024, we were at 97.95% at the end of December 2024. So we were literally neck and neck with 2024. So our collection rate has been really good. Now, what that translates to is, since we budgeted for a 95% collection rate, but we ended out the year at essentially a 98% collection rate, that means we took in an additional $89,000 into this line item, into dues and assessments income. So we took in an additional, practically 90,000, you could just say rounding it, more than what we budgeted. I'm going to go on to this next sheet real quick. This is the cash reserve balance sheet. We'll just look at SURF because it's the same pattern for every single one of these funds. Obviously, the main funds, SURF, roads, these are the funds that you hear about the most during budgeting process, mailboxes funds, UDR funds. But it always starts out at net available cash, the balance sheet cash at the end of 2024. So if you look back in the balance sheet, you would see that for 2024. And then we have basically the cash coming in, dues received. We have some interest income coming in, some sale of assets, minor sale of just things like with golf, stuff like that. We have this 2025 expenditures, which you're looking at here. These are basically all the checks that were cut and went out the door to pay for all of these approved capital projects, loan payments, so on and so forth. So this is all the money going out the door to finance all of these approved obligated capital projects and things like, for example, the SURF loan payment, which the board approved to come out of, obviously, the SURF fund. And then down here, you'll have this is the kind of the projection amount. So you're looking at November. So you can see there's outlook at a 95% collection rate, then we would expect it taking about 114,000 in dues. We had better than 95%. These are material line items. There's the SURF loan payments for one more additional payment. So now you can see that's exactly how much we spend per month, a payback for the SURF loan. And then this is the important one, the obligated expenses, 1.19 million. Now, if I went to the capital report, this is the SURF projects. All the SURF projects open in 2025, and you can see there's 1.191 million right here. And like I've said from month to month, the good thing about this capital project report is it has all, like, we'll just look at this last one, this last line item right here. You can see the approval date is this capital project was approved on October 23rd, 2025. The board approved for the maintenance truck replacement. The approval, the obligated amount, $56,243. You can see that the total invoice amount, $35,216. There is $21,027 of basically available funds for this, but of course we know they're done spending on this project, and so actually it's a good line for me to pick out. So then the question would be, well, what happens to that obligated amount? Well, as soon as we close the project, then that obligated amount of $21,000 basically returns to available funds for SURF. But if, like in the future, if you're ever wondering this maintenance truck replacement, what is this exactly? Well, it was approved by the board on 10/23/25. So you could literally just go right to the October 23rd, 2025 board agenda, and you could find that exact project memo in that agenda on the website. So, and you could do that for any one of these projects. Like, for example, go to the next page. This is the roads page. Same thing. What is this design permits for 2026 road projects, where you could just go to the February 27th, 2025 board agenda, and you would see you'll see the capital project memo right in there explaining what that was. But it's the same drill for the roads, same thing. You'll see there's that 1,005,000 obligated amount. There's the 1,005,000 obligated amount under the roads column, and it's the same drill for UDR. The only other thing I'll say on this page is, but basically, I'll just return to SURF real fast. So we have this, once we subtract away all these obligated amounts, we have $2,722,090. We have this board recommended carryover balance of $600,000. That's essentially just the amount that the board doesn't want to drop below in the SURF fund. So then if we subtract that away, then now we know at the end of the year, we have $2,122,090 of basically residual balance left in the SURF fund at that point. So from month to month, like when December shows up, January, February, March, whatever, any projects that the board approves during that time, then automatically starts dragging down or adding to the obligated expenses, which then decreases the amount available for future expenditures. You could think about it like that. The last thing that I'll talk about on this page, this UDR fund, and I'm sure everyone hears that term. It stands for Undesignated Reserve Fund. And like I told the board at the last meeting, actually, I mentioned this basically at some board meeting, but undesignated reserve, how money gets in there is, so when you pay your monthly dues, you have in that $167.21 monthly dues payment, a portion of that is operations, portion of that goes to the SURF fund, portion goes to the roads fund, and then small amount goes to the mailboxes fund. So the undesignated reserve account, now that we're in the month of February, for any previous month in a previous year, like for example, December 2025 or before that, if someone has not paid their dues, if they're behind in December for December dues, when they pay that in the current year, meaning now we're in 2026, if they pay a month's worth of dues outstanding from 2025 or before that, the operating portion of those dues goes into the undesignated reserve fund. The SURF portion, the roads portion still goes into the respective funds where it should be going, obviously. But the prior year's operating portion of unpaid dues goes to the undesignated reserve fund, and then that amount obviously just builds up the fund. And then the board approves expenditures out of this fund, just like they do the SURF fund and the roads fund and mailboxes fund. But that's how money gets in there, and that's how money gets spent out of it. So the last page of that capital project report shows the UDR projects, and this basically shows you, like, for example, the last thing that was approved was hazardous trees of 100,000. You can see we easily spent all of that in 2025. But this is kind of a fund that will go to for basically unplanned expenditures during a year, or expenditures that could go over and beyond what we plan for in operations. Then we'll ask the board to approve it. The big thing that gets approved out here the most is hazardous tree removal. Okay, this is the last statement that I'm going to talk about, and that's it. And this is what you're looking at here is you're looking at the income. This is the same. The income statement, again, is just now presented on a departmental basis. This is showing you what departments in the end contributed net income loss, better, worse than budget, contributed to that 168,411. So it's showing you by department. Now, obviously, with these departments, especially these departments here, ACC security, accounting, administration, common cost, facilities, maintenance, these are all expense centers. You don't have a lot of revenue coming into really any of these departments. Well, I mean, you do have the revenue obviously coming in ACC security, like building fees, so on and so forth. Some minor revenue coming into stuff like admin and accounting, like when there's a Sun Valley Fair and they have vendor space rentals and that sort of stuff, that gets into administration or basically property transfer fees into accounting, meaning the admin portion of it. But the big revenue centers for this place obviously it's going to be golf and especially marina right here. So we'll go ahead and I do talk about golf every single month, so I'll hit on golf here. So you can see for golf, you can see actual revenue through November, $1,379,209. At the end of November 2024, so I'm comparing this year over year. At the end of November 2024, the revenue was $1,393,260. So revenue was down year over year through November by 14,051. The expenditures, this is the actual salary and benefits. This is salary costs, medical premium costs, payroll taxes, all of that gets in here to into the actual salary benefits column. And then the all other expenses. So basically this 773,699 plus this 428,561 that comes out to total expenses of 1,202,260. Year over year at the end of November 2024, total expenses 1,133,139. So expenses are up by 69,121. Obviously, we expect to see this since pay rates alone, as according to the collective bargaining agreement, the union collective bargaining agreement, pay rates had to go up 3%. So pay will go up 3%. Obviously, sand, gravel, all that sort of stuff, those expenses have gone up from the previous year. All of that lends into increase in expenditures. But the bottom line for golf is net income is 176,949 in November. At the end of November 2024, net income was 260,121. So net income is down by 83,172 over previous years. So I mean, those sorts of differences, as you can see, make their way into the income statement and affect like overall operating income, so on and so forth. The big thing, if I just go back here to the income statement, is like the operations better or worse column right here. This so contracted and professional services. Let's just look at this line, and this can be really helpful to anyone if you're ever wondering why something is over or under or what the heck that is, what causes that. So you could see, and I'm looking at the long. So this is like a 33-page document that's on the website, and I take it everyone knows where to find this on the website. Well, let's just look at it real quick.
Joel, I did a presentation on that last time, so everyone has seen it. Yeah.
Did you show them where to go to see the differences of this?
Yes.
Okay. So let's skip that. But so basically, bottom line for contracting, we're just going to hit these big line items. That's it. Only just a few of them. Contracted professional services. This is telling you it's over budget by $100 and almost $10,000. And what that is literally 67,000 of that is trees, or sorry, 67,000 of this is the ACC consultant. 51,000 of that is also, which is over budget, the HR consultant. So, and the reason why the HR consultant will be over a budget by 51,000 is that is a line item that appeared after the budgeting process was completed. So we didn't have an HR contract at that time to budget for. It was HR contract was contracted after the budget process had been approved and so on and so forth. So a line item that will dollar for dollar automatically like trigger an over budget, but that happens.
So Joel, so when that
Sure,
happens, like the HR contractor, did it lighten the load somewhere else? Was there an HR person we have that we no longer have, or is this an extra expense that we took on because it was needed?
It was an extra expense. I was the one who presented the need for that, Jean, before I left. And it was supposed to be offset by savings in other areas, which I recommended to the incoming GM, which he did not implement.
Okay,
So that was that.
okay, yeah, thank you. I was just curious. HR is invaluable, so I understand getting it in contracting it out, so. Okay, thanks.
Yeah, of course, two areas that I did tell the board at the last board meeting, literally last week, in terms of what, in terms of things like expenditures that are over budget, that does obviously contribute to like a drawdown in cash. And basically, so that this one right here and this line item, whatever this 77,000 for CCNRs and mandates, but basically legal expenditures. So the two would be legal expenditures and hazardous trees. Hazardous trees is the biggest, obviously. Legal, this is one thing that's hard to predict and hard to, from one year to the next, how much legal type services are we going to be using? But legal right now to the end, and through the end of November is 107,000 over budget, for example. Hazardous trees which is in the regulatory compliance line item. You can see this line item's over by about 61,000. Hazardous trees is 58,000 of it through November. And but those are the two biggest areas. And actually, this one little chart here that I'll pull up for hazardous trees. And so this is the last thing that we'll talk about with this, because hazardous trees is literally the most important line item in terms of expenditures and how much hazardous trees is costing the association. Legal can be obviously controlled a lot better than trees, like from year to year, and obviously the trees have become more expensive, but you can see this chart right here starts at 2014, which is when the C3 accounting system was implemented here in Seven Valley. So we can track it very easily, from 2014 on, but you can see it. 2014 is 32,000, 2015, 16,500, 2016, 19,255, 2017, 29,000, starts to pick up a little, 2018, 64,000. And by the way, this also breaks down the operations, what got billed exactly to operations. I would just highlight that for a second. These two line items track exactly that November bombs, storm, cyclone event. These are charges directly related to that. And this last one, which is the UDR, these are, now you can see from year to year all the different separate requests that went to the board to take money out of the UDR fund to the trees. You can see obviously that picked up in years 2021, 2022, once we get into these years, but you can see like the expenses really in 2018, 64,000, 2019, about 48, 2020, 59,000, 2021, now it's 140,000 total expenditures in hazardous trees. 2022, it's 203,000, 2023, 144,000. 2024, this is that bomb cyclone event now getting into things. Now we're up to 460,000. That's how cash really starts to get drawn down from stuff like this. And then 2025, we'll finish out the year for that at 257,000 for hazardous trees. And now you can see, as of February 16th, we're already at almost 42,000 for hazardous trees. We're almost we're getting to the ballpark of 1/5 of the entire 2026 hazardous tree budget, which is 250,000. This is that hazardous tree line item was the one line item that I really beefed up from previous years. Originally, I had up to 300,000. Then during the budget process, then we decided to cut that back to 250,000 to deflect some more money going into the SURF fund. But that's essentially why. And so it's the hazardous tree line item, which is the one thing to really kind of watch. And it's the one thing that's really expensive, obviously, for the association. I don't know, Joanne, if you had anything more you wanted to add for that.
I think the most important thing that Joel said was we don't have a choice about our spend on hazardous trees. If a tree is shown to be hazardous and there's a specific assessment that is completed, In order to do that, if it's shown to be hazardous, we must remove it, or if it does fall, we would be liable for any damage that it does. So all the money that we're spending on trees is only being spent for the removal of trees that are identified as imminent hazards to people or property. And there has been no spend on proactive forest management for years. And yet you can see how the spending has increased exponentially.
Yeah, in terms of like to look at it in chart form, that's basically what it looks like, how the hazardous trees really picked up from 2014.
Are there any questions? Joel spends a lot of time explaining how the financials work so that you can dive into them. Sometimes the metadata gets lost. Our operating cash is very low. That we'll see that start to increase naturally this year, 2026. As we get into the year, the cash will rise, but it is very dangerously low. The main reason for that was the transfer of funds to pay back the costs of cleaning up from the storm. And it's a glum picture. We expect to finish the year at a small deficit in operations. So we'll be at a loss, showing a loss in operations. And that's not because assessment revenue wasn't strong. As Joel remarked, we have a much higher than budgeted collection rate. And we did almost what we needed to do in golf. And certainly we had very positive years for all the other revenue generating areas, departments that we have here. But the biggest problem this year was that expenses were out of control, not only trees, but also legal. The decision to keep on the ACC consultant, even though we hired a full-time person who was supposed to absorb that work. Those were decisions that were made, and they had a significant impact. The other thing to really note is that this is the second year that we've seen golf revenues decline. 2023 was an almost perfect year in terms of the weather for golf, and revenues were at an all-time high. In 2024, there were several misfortunes and not as good weather, and so revenues declined. Again, in 2025, this time politically motivated, we saw significantly fewer Canadians traveling into the United States to play golf, and our revenues were affected. So that's a very disturbing beginning of a trend. As an old mentor of mine used to say, 2 data points don't make a trend, you need the third one. And out of the gate, we're doing a little bit better. But as I mentioned in the GM report that I delivered to the board last week, the increase in golf revenues may be cannibalistic. We saw a lot more memberships being purchased, and golf memberships allow people to play golf for free. So I'm glad that people are playing more golf and that the golf club has more members and that we sold more memberships generally. That's a positive thing, but it may mean that revenues continue to decline. And it's not a huge decline, but it is a decline, which is disturbing as we look at the fact that there's about a $90,000 profit. And I'm using air quotes when I say profit, because of course, the budget is presented in these financial statements right here is just the operating budget. So if golf made $90,000 in 2025, we're going to see that they're in a few minutes, they're requesting $234,000 out of capital to pay for new equipment. So it's a losing proposition all around. And that's been the case, that golf courses generally don't make a lot of money, if any, but it's just something for the entire association to be cognizant of, because of the legal requirement to present our financials as operations separate from capital. It's easy to get fooled regarding the performance of certain of our assets.
Yeah, and of course that's also true in terms of like with the rec department. If you look at the operating loss of the rec department. That doesn't obviously include the capital side of things, so capital expenditures. Now, if I were to put, just looking ahead for December, like December year end, if I were to put together December's financial statements right now, obviously this December's a little tricky because like, for example, like this week, we finally got the invoice from Unilect, that pertains to 2025, which was 21,000 right there. So I mean, we can get invoices that trickle in here that we have to backdate into 2025 for audit purposes, for cutoff purposes. But right now if I were to put together the financial statements, we would be looking at an operating loss of approximately 39,000 for 2025, which quite frankly isn't too bad given everything that occurred during 2025.
Yeah.
So Joel and I talked a lot at you. Sorry, any questions from y'all?
I have my hand up. I had a question. I know a few years ago we bought a snowplow, and it looks like so far, hold our breath, but it doesn't look like we're going to have much snow. I'm thinking we probably had a line item. Not sure where the line item is for a snow budget. Is that in the storm common area?
Yeah, that's in some people don't like it when I flip through these statements, but I'm going to go ahead and do it just to show you.
Well, I know we had a snow budget,
but
and
yeah, that's
the
maintenance. And I'm sure Joanne already pointed this out to you when she went over the financial statements. But the great thing about these financial statements is you can literally you can make yourself get into finer and finer details. Now we're 19 pages into this thing, so now we're looking at on a departmental basis by GL line item. So the snow removal stuff is in the maintenance. You can see like a couple line items. You can see this weather response payroll budget amount 15,000 and then 1,500 for some payroll tax. You can see budgeted for maintenance for weather response, meaning like storms and snow removals and stuff like that. And there's also this weather response line item right here, $35,000 for supplies and basically snow melt and things like that.
Joel, can you stop highlighting it? Yeah. You can see, Ray, in this column all the way to the right, budget remaining $22,902. Yeah. That's because we haven't had to purchase additional sand or salt or brine. Yeah. That's the biggest expense. The amount budgeted on in the section above for payroll and benefits is the overtime that we end up paying, or the amount of payroll dollars we pay to turf care employees who are co-opted into helping to plow during storm events, so we can have crews around the clock. Because we didn't do that, we saved $5,242. You can see over in the far right column.
Oh, okay, there you go.
Right, but it's not a significant amount. Why? Because this is just operations, so there's no capital costs in here. The cost of all that equipment is not in here, obviously, and also it's a sunk cost to have maintenance do snowplow. We're paying maintenance anyway, so that line, it's not as much of a savings as you would think.
Oh, okay, it's kind of in-house.
Yeah,
and then but our snowplow is paid for, correct?
Yes.
Yeah.
Now, in the past, before we got that snowplow, you know how we rented the contract with the baby plow, snowplow?
Yeah.
Now that would also be down in here in maintenance and landscaping. There is a line item, that line item, that cost got into that section.
Yeah, and it's just not one plow. You're remembering the request where we asked for money to buy the UTV that is equipped with a brine sprayer and a plow. Yeah. But all of our maintenance trucks get fitted with plows and sand spreaders or brine sprayers, depending on what we need to do with them at any time. So there's a lot of equipment involved. I think we have 6 trucks now with plows in addition to the UTV.
Yeah. Well, I guess I was hoping for more savings, and now that you've explained it to me, I understand it. So I'm hoping for no snow here this next month. So keep the cost down. Maybe we'll get another couple $1,000. Who knows?
Yeah. Well, like,
Thank
I
you.
mean, like the good thing so far through November, we have, we're $23,000 under budget on that weather response.
Yeah, we'll take it. We've been over
And,
budget everywhere
you
else.
know, and like 5,800 in total for weather response payroll as well.
I think maintenance is the only department that's under budget for 2025 through November.
Yeah, and facilities, I believe, as well.
Yeah. Maintenance and facilities managed by Mike Brock. They were under budget and performing above expectations. So very good job done by Mike there.
Yeah.
Awesome. Any more questions?
I'm going to raise another question here. I have another question. So we're looking at November, Joel. And
Yeah.
Joel, we're looking at November and it's February. Are we
Uh-huh.
always looking at them a few months later after they've already happened?
Yeah, actually, the release of these financial statements has literally remained unchanged for years and years. And the thing that's maybe making it look a little more alike would be how the board kind of that schedule has been changed in terms of the presentation of the financial statement. So, like for example, so normally November, like how it would have been done in the past, November would have been presented at the last board meeting, meaning in this case it would have been presented at the second board meeting in January. But now because of how kind of the board, how they did, Joanne, I guess you could speak better to this in terms of they're bringing up actual board actions on the second board meeting. So the first board meeting was then reserved for more discussion type items. So then that's why this was moved to the first board. It got kicked to the next meeting, so to speak, the first meeting of the month. But the
primary reason for the timing of the statements is that we have to wait for the invoices to come in for the expenses that are in the given month that we're reporting on. So if you wait 30 days to get those invoices, and we don't get all of them in that time frame, but that's just the window that we use, and then they actually have to be completed. This is not press a button and get a report. These financial statements require about 2 days of work from Joel. And so he doesn't have 2 specific days that he can set aside to work on these statements. So he fits it in. And that's why we get them 2 months after the fact. And the primary driver of that is waiting to get the information to be able to report about the period accurately.
Do you have a question? How much of by the next month, about what percentage of the information do you have? Like the middle of, so let's say this is January, so it becomes the end of January. By what time in February do you have the majority of information that you need to input? And I'm assuming it's getting inputted for January as you're going along also.
So now what did you say? What month?
Well, so how long does it take? So I'm just trying to figure this out a little bit. So we can have this discussion, but if you're going to give a report, January's report, and it comes out in March or even the next month, April, when did the statements come to you? When do you have most of the information, the bills and the receipts into the system? Even though you don't have your statements, but I'm assuming you put your bills in and your invoices in as they come into the office. Is that correct?
Yes.
Okay. So
but then it depends on the dates on those invoices as well. Like for what period those invoices pertain to. Like there are times even, like for example, of course, December is the worst month because that month has to be the most firm month, especially since now we're talking about numbers getting into an audit year at that point. But like, for example, even last year in March, I was having to reopen December because we would get more invoices and then push those numbers back into December. But typically how this goes is like, for example, November. Okay, so November statements, and this, like I said, this process, and this pattern has literally been uninterrupted for who knows how many years, but like November's statements then would then be released in the month of January, which they were, posted on the website. And then typically I would be presenting the January statements at the November statements at the second board meeting in January. But it was just because of how the board has changed kind of the process of, like informational for the first meeting, then the second meeting devoted for action type decisions. That's what then kicked that off another couple of weeks.
Yeah, okay, no, that's okay, I understand. All right, that's fine. Thanks, Joel.
Sure.
Thanks, Joel.
But there have been times, like for example, Gene, maybe this would be the easiest way to answer this. There were a couple of months to where we were trying to push them out really early, like a month earlier, and then it was just decided that we're missing too much in terms of invoicing and expenses that we knew were going to come in, and bank statement type processing, and just the journal entries that work their way through the general ledger that are coming in from the different departments. It just wasn't going to be enough time to do that.
Okay.
To come out with like firm, accurate numbers in that situation.
Okay. All right. Thank you.
Sure.
No other questions? We're good? Great. Thank you, Joel.
Yeah.
Okay. We have more capital requests to discuss. Talking about the golf course. It looks like we got 4 pieces of equipment that are being retired, and so we'll need replacements. Golf course would like to get some replacements of them. Looks like they tried to get 3 bids, but only 2 of them seemed that they were going to work out because the third firm was in Japan or somewhere, and it was going to be too hard to get parts. So they're requesting $232,505 from the surf for 3 John Deere mowers and a Toro Greens roller. Did everybody have a chance to kind of go over this and look at it? These are in the capital. These are in the surf fund to be replaced too. Questions, comments? I had a really hard time kind of going through this. The John Deere was pretty easy, but the Toro one I got a little confused with looking at their estimate. Joanne, is that the Toro motor? It says all these mowers, my understanding, all these mowers are going to be from John Deere, but that Toro looks like that's a Toro quote. Is that correct?
John Deere doesn't have a greens roller, so we're taking the greens roller from a Toro dealer. Yeah.
Okay. I just want to make sure. It took me a minute to find it. Okay. Do you have any?
Yeah, that one for Toro also says it's pre-owned, so that means it's the pre-owned Master. That's so secondhand equipment.
Yep.
Hopefully we save some money on that.
Yeah, well, you can see the new one in the Toro column was 27,259.84.
Okay.
So we saved that much money, about $8,000.
Yeah, that's good. Well, I think they did we got a couple quotes, and the one's got bad parts. It's hard to repair something if you don't got parts accessible. I understand that. Had equipment for a while. It's a real pain. You got to have the goods to keep the grass going. I mean, it's a big deal. So,
yeah, it's important to have the proper equipment so you can have the proper venue. Okay. Joanne, do you have anything you want to say about this other than what I've just said?
There was a 4th mower that was in this year, Greg, Wadden, our turf care superintendent, elected to push that off because he thinks he has another year at least in that mower. And when purchases can be extended, we do extend them. The pieces of equipment that are being asked to be replaced are at very high hours. And one of the problems that nagged at Greg, and he had to deal with the entire time, the entire season this past year, was equipment breaking down and needing to be repaired. And when that's one of the two fairway mowers, that's really problematic because they have to mow the fairways every day in the summer they have to get that done so that play can begin. So they're in a pretty tight time frame for that, which is why he moved up the fairway mower during the budgeting cycle to be replaced this year. So I think these are good purchases. They're well-priced pieces of equipment that we're getting. Yeah, and having a lot of our equipment come from John Deere makes a lot of sense for stocking fewer parts and things like that. So all of that is intelligent, and it's within the budgeted amount in the capital allotment for turf. So I don't see any reason to question this purchase.
Any other questions or comments?
No, I'm thinking we're needing it, just like it's been laid out. I do have questioned the equipment that we presently have. Do we have a way of offloading that? Old equipment?
All of the equipment has been used so heavily that none of it was acceptable as a trade-in, that's my understanding, but we instead do private sales and then take back in to our accounts whatever proceeds are made from that sale.
Okay, so there's an avenue for it.
Yeah.
Just out of curiosity, where's the money go when you sell a piece of equipment? Where does it go back into? Does it go back in SURF or UDR or?
No, we'll put it back in SURF.
Put it back in SURF. Okay.
Yeah.
Great. Thank you. Any other questions? All right. So here's the motion. I move that the Finance Committee recommend to the SVCA Board of Directors to approve $232,505.60 from the SURF for the purchase of the John Deere 6500 fairway mower, 2 John Deere triplex mowers, and a Toro H11 greens roller. Second. Anybody?
Second.
Okay. All in favor? Aye. Unanimous. Great. Thank you. Passed. And then the last one, the addendum.
Yeah, there's 2 additional requests in the addendum. The first one is for the 2026 road repairs. In February of last year, the board approved $41,888 in funding for the design and permitting of road repairs projects to be completed in 2026. And the purpose or the reason that's happening is because the county is so far behind in approving permits that we now have to work a year in advance. Engineering was completed by Impact Design, and permits are in the process of being submitted to the county. At this point, we're requesting funding to put the planned projects out to bid and complete the work during the construction window of June 1st through September 30th. So we're on a pretty tight time frame. In the 2026 capital budget for roads, 4 roads were identified as being needing asphalt repairs this year: Appaloosa Court, Yearling Place, Misty Ridge Court, and Fields Park Place. And you can see the differing amounts allotted in the budget to each of those 4 locations for a total of $193,574 in asphalt road repairs. In addition to those repairs, the 2026 budget identifies 24 culverts that are scheduled for replacement. One of those culverts I'm calling out, it's culvert 25. It's a large box culvert, and the current replacement budget is $594,880. Because of the high cost, we keep a close eye on that culvert. And at this time, both Impact Design and SVCA staff agree that the condition of culvert 25 has not significantly degraded since the 2024 inspection. And their recommendation is that we delay the replacement to 2030.
Yeah.
So that's a good thing. The culvert
Yeah.
will be monitored by staff and re-inspected in 2028 as part of the 5-year renewal of the 10-year roads and drainage plan. And that's one of the reasons why we feel comfortable doing this, because we know that in just 2 years, we're going to do a complete re-inspection and reprioritization of our roads assets. The remaining 23 culverts, we do recommend go forward for replacement as scheduled, and the budget includes $135,140 for that work. Drawings for the road improvements and culvert replacements have been attached for reference. I'm sure you all enjoyed watching each and every one of them. A lot of pictures associated with this.
Yeah, well done though. Well done.
Yeah, the engineer's estimates were not completed separately because the work done by Impact Design as part of that 10-year roads plan is fine for the purposes of permitting, and it's believed that the estimates are still valid. So the request is that the board of directors approve the allocation of $428,714 from the roads reserve fund for the completion of the noted road repairs and culvert replacements.
Any questions? Kind of need to fix our roads and culverts. No questions? All right, so I'm on this page now. All right, here now I say that I move that the Finance Committee recommend to the Board of Directors to approve the allocation of $428,714 from the Roads Reserve Fund for the completion of the four road repair and 23 culvert replacement projects proposed for the completion in 2026. Second it, anybody?
Second.
Go ahead,
All
Rob.
through?
Ray.
All through?
Ray can second.
Ray, okay, I got Ray.
We're all
Okay.
approved.
Yep.
Proof, everybody's proof, okay,
Yep.
passes. Very good.
Yay.
Thanks, Laurie.
Didn't realize it was a competition.
Yeah,
Well, a couple years ago, we weren't required to have seconds in the small committee per Robert's Rules of Order small committee. So we didn't used to do seconds.
so maybe we don't need to, it's just at the last meetings I've been to, that's kind of how it was running, so I just.
Yeah. So if we just delay, that's what.
I am fine with just voting, so I have no problem with that, unless somebody complains
Yeah,
about it.
the Robert's Rules of Order police have not logged in, so I think we're good.
Okay, good. The more casual for me, the better. Okay, so this other request, honestly, I didn't realize there was one more attached to the end, so that's my bad. Joanne?
Yeah, and this
can I go over
is quite a Byzantine one, so I'll just jump in and explain. At this time, we're requesting approval to do a contract award using SVCA standard construction contract with Linden Sheet Metal, and simultaneously asking for an additional capital request to be approved to address a shortfall in the funding. On August 28th of 2025, the Board of Directors approved funding in the amount of $147,752 for the replacement of the 20-ton HVAC unit that serves the clubhouse. A portion of that funding was allocated to make temporary repairs to the current unit to keep it functioning through the winter. On December 17th, PNW issued a bid package to 5 contractors for the replacement of the unit. You can see there the 5. 2 quotes were received. 2 contractors elected not to bid, and 1 contractor never even called Tyler back. It was a very complicated bid package. There were 6 amendments issued to accommodate changes in the original design. Those changes were made necessary by changes to the code. Specifically, the type of refrigerant that was used in the original design is no longer allowed. So that appreciably changed the cost. And required the extension of the bid period because the unit had to be redesigned. So the funding approved in August of last year included $100,000 for the HVAC unit, $25,000 as an allowance for the exterior work, trenching, asphalt patching, landscape repairs, etc. 11,000 for sales tax and $5,400 for construction management for a total of 141,400. After receipt of bids, unfortunately, the updated construction budget is $152,294.98 as per the quote from Linden Sheet Metal. That price includes sales tax of 8.8%. There's $7,614.75 added to this budget for 5% construction contingency. Many times we enter into these projects and then something goes awry and we need more money. So I have instructed everyone to add contingencies. At 5%, this is a pretty low contingency ask, which means that they're very confident about the bid. $25,000 remains the same for exterior work. $5,400 for construction management remains the same, but the total construction budget is now $190,309.73. The board allocated a total of $169,928 for this project across both 2024 and 2025. To date, only $23,000, not $123,000, has been spent on design and permitting, leaving $146,124.21 available. Because the cost of the project exceeds the remaining budget, I need to ask the board to approve an additional $44,186 in funds. This amount will be partially.
Nope, you froze, Joanne.
Am I still frozen?
Yep, you're back now.
Okay. This is all not very good. I'm sorry.
Right.
The additional amount being requested is $44,186. We have proposed to offset that by removing the funding that had been set aside for renovation of the old administrative offices in the clubhouse. Obviously, that work does not need to be done right now, so we can just take that off and refigure it when we know what we're doing with that area of the clubhouse. Are there any questions?
No questions?
Yeah, once we approve this, it's going out to bid. The board.
Well, it's been bid. This is a contract award. So
okay.
The two motions are approve additional funding and then approve the award of the contract to Linden Sheet Metal and give me permission to execute the contract with them.
Okay, no questions. Sounds good.
It's got to happen.
Okay, then I move that the Finance Committee recommend to the Southern Valley Community Association Board of Directors to authorize $44,186 in additional funding for the replacement of the clubhouse HVAC unit, capital project 9724.06. Ayes? Oh, wait, I guess we'll do it all at the same time. I also move that the SVCA Board of Directors approve the award of this contract to Linden Sheet Metal and authorize the general manager to execute the SVCA standard construction contract. Ayes to both of them. Hands up. Yep, unanimous. Great. Thank you. No first and seconds needed. And that is the conclusion of our program tonight. Any other questions or any other messages anybody wants to relay? No? Okay, then I say that we adjourn. 7:41 is our adjournment time. Thank you, everybody.
Perfect. Thank you. Nice to meet you, Marty.
Nice to meet you too, Ray.
Okay. We'll see you soon. Oh, there we go. That's good.